was better than last year.
Oh,
I worked.
I agree.
I worked last year, so it was like working and being there. It was definitely a better facility, and it ran a lot smoother.
Didn't they have that air conditioning on deck? That's
yeah,
what I mean.
That was nice. It was nice.
Yeah, that air conditioning.
I worked at the last year, but it got kind of gangster.
What you say? Tearing up stuff.
Babies going, it was going crazy. So last year, I was thanking God that was me.
Okay. So, what was the problem I just gave you?
We were talking about doing gift problems.
Oh, exercise 11-9. Exercise 11-9. 466 at the bottom. Okay, so Ms. Williams, can you read that for me? 11-9.
Okay, the company sold a copier costing $4,800 with the 2-year.
For the 2-year what?
Oh, everybody hear me?
Yeah, I can hear you.
Okay. It sold the copier for $4,800 with a 2-year part warranty to a customer on August 16, 2013 for $6,000. This uses the perpetual inventory system. On November 22nd, 2014, the copier requires on-site repairs that are completed on the same day. The repairs cost $209 for materials taken from the repair parts inventory.
Okay. And it floats over to the next page. These are the only repairs required in 2014 for this copier. Based on experience, kids who expect to incur warranty costs equal to 4% of dollar sales. It records warranty expense with an adjusted entry at the end of each year. Ms. White, remind me of a break, okay?
Yes, ma'am.
Thank you. All right, so number 1, we're supposed to find out how much warranty expense does the company report in 2013 for the copier. So how are we going to calculate that? What was the copier warranty worth? Like how much? No, that's how much the copier cost.
The warranty is 4% of the dollar sales, which the sales were
okay. So 4% of the dollar sales.
4% of 6,000.
6,000 was the dollar sales. So 4%.
$240.
6,000 equals a warranty expense of $240. Good. Now number 2 says, how much is the estimated warranty liability for this copier as of December 31st, 2013? Now, what happened on 2013? We just talked about it. That's when the warranty, that's when the copier was sold, right? Or the sales. So that means the warranty expense for 2013 is going to be what? $240. And then 3 says, how much warranty expense does the company report in 2014 for the copier?
200.
For a warranty in 2014. Did you have any more sales for 2014? Did it say that? So that means that you technically would not have a warranty expense for 2014, right? Does that make sense? You had a sale in 2013, and the warranty expense was 4% of those sales. But did it state anything in there about sales for 2014? No. So that means that we have no warranty expense. Okay, 4 says, how much is the estimated warranty liability for the copier as of December 31st, 2014? Explain.
So you take the 241 and the 209 that they had to pay for the.
So 240 is our 2013 ending balance, right? And we're subtracting what?
209.
What's the 209?
The cost of the repair.
Repair expense. Subtract the 2, that leaves us with $31. And that $31 is what?
The liability.
Ending.
Balance. Ending balance is 2014.
That's it. Ending 2014. All right, 5. Prepare journal entries to record A, the copier sale, B, the adjustment for December 2013, and C, the repairs that occurred. So the first journal entry to record the sale. Anytime you record the sale of something, you also have to record the what? Cost. Cost of that sale. So to record the sale itself, what do I debit? What do I credit?
Cost of goods sold.
Oh, hold on. Uh-huh. So, go ahead, Ms. Coleman. I'm sorry. You're okay. Okay. What do we debit and what do we credit to record the sale?
Cash.
Uh-huh.
Debit cash for 6,000.
Okay. Credit what?
Sale 6,000.
Now to record the cost of this,
Cost of goods sold.
debit cost of goods sold,
Credit merchandise.
merchandise inventory. What's the amount?
4,800.
4,800. Okay, B, they want us to record what?
The adjustment on December 31st, 2013, recognize the working.
Okay, so if we're going to record that adjustment, and it's just dealing with warranty, right? What do we debit and what do we credit? Warranty expense is debited.
An estimated warranty liability.
What's the amount?
240.
And C, what do they want us to record?
The repairs that occurred in November,
So the repairs. What do I debit? What do I credit?
repairs expense,
Estimated warranty liability.
Is the debit. What's the credit?
Auto parts inventory.
Repair parts inventory. Okay. How much?
209.
Bless you. Do y'all need this door open? Is it hot now? I'm hot. My hormones. Okay, good. So let's move on. Exercise 11-10, dealing with bonuses. Exercise 11-10, for the year ended December 31st, 2013, and I'm just reading it, I know that you're still writing. For the year ended December 31st, 2013, Lopez Company has implemented an employee bonus program equal to 3% of Lopez's net income, which employees will share equally. Lopez's net income, pre-bonus, is expected to be $500,000 and bonus expenses deducted in computing net income. So the first thing they want us to do is compute the amount of the bonus payable to the employees at year end, using the method described in the chapter and round to the nearest dollar. So, you guys have this up here?
No.
Okay, let me know when you're ready. Ready? Okay, so how are we gonna calculate this bonus based on what they taught you in the chapter?
Multiply it by 0.05.
Multiply it by 0.05.
0.05, and you multiply the 500,000 minus B.
You'll take your,
So B equals,
Yeah, B equals 0.05 times 500,000 minus B.
and we have to make sure we know what these things are. The 500,000 is what?
that's expected net income.
Pre-bonus expected income, net income.
Pre net income.
Pre-bonus net income.
Okay, and the 0.05 is what?
That's the bonus.
The 5%.
5% is what they state in the problem. Okay, so B equals 0.0.
That's only 3% of the problem.
Where did you get 5?
I was looking at
From the formula on
from the
page
formula. Yeah.
448.
So the problem said 3%. So that's what we have to use. Okay, so what's the next step? B equals 0.03 times 500,000 minus B. Of course, the rule is for you to do what?
Do inside.
Yeah, so 0.03 times 500,000 is going to give us what?
15,000.
15,000. So the next step is to B equals
15,000
minus 0.03 B. Now what's the rule? This is going back to math.
Don't divide.
You gotta get the
You gotta get the B right
B on the left side, so you multiply it by 1.
So multiplying 0.03 B by 1 is going to give us
1.03
1.03 B
equals 15,000.
equals 15,000. This makes it a lot easier to do at this point, right? So what is the answer? B equals what?
14,500.
That's rounded to the nearest dollar? Okay.
You say you divide each side by 1?
Just the the .03B.
When you add the .03 to both sides, this will give it that 1.03 on B.
I don't teach math. I'm just going by what the book says. The book tells you the rule, period, is for you to get the B by itself.
Right.
And in order for you to do that, what would you have to do?
You gotta add the .3 to both sides.
What math you done took?
Okay, the equation is B equals 15,000 minus .03B. In order to get that B cancel out, you gotta cancel out that negative .03. In order to cancel out that positive, you gotta have a negative. So you're gonna add.
You mean in order to cancel out the negative, you need a positive?
Right. So you gotta add that .03 to both sides. That's what gave you that 1.03B on that side by itself.
You're asking me how to
No, I'm telling you, that's how it happens.
Cause why is it a one? I guess that's
Yeah,
what she's
right.
saying. Why are you
You
adding a
gotta
one?
count
That
out
one
that
is
0.03.
inaccurate. It should have just been .03.
That one
No.
ain't inaccurate. Look in your book.
I'm saying,
You
count, that's how you,
one. Oh,
that's how you got that B.
So if you was to add a .03 to 1B, 1.03 would be .03B on the other side.
Before we even get that deep, this is accounting. Okay. We're not going into math. I told y'all to look in your book under where it says bonuses. That's what you should always use. I stated that last week, remember?
Okay.
I
They
sure
do
did.
have a one. They do
They
have
have
a
a
one in
one.
the book. They
Right.
add a one to it. Okay, so you got a one to it. So this is accounting.
I don't want
That's
you to
why
get that technical.
we should have went to.
Yeah, because we
I
ain't.
stay on that lane.
I'm
not getting in the
glad
code.
I am glad you got an A in college algebra. I am. But just to keep it for right.
Put it where it goes.
Just for this one time.
Okay. Don't try to figure it
Do
out.
what the book
Do what it says.
tell you to do. Because if you mess around and do it the algebra way on your homework, it's probably gonna mark you wrong.
Okay.
If you don't get it right. Okay? It doesn't matter to me which way you derived at that 1.03 as long as you got there. Now, the second part of this, part 2, wants us to prepare a journal entry at December 31st, 2013 to record the bonus due to the employees. So since we know the bonus now is $14,563, how are we going to record that in a journal entry? What do we debit and what do we credit? How do we record what we expect to pay? Debit what, credit what?
We're gonna debit the employee bonus expense
Debit employee bonus expense
and credit the bonus payable.
and credit bonus payable. That's to acknowledge that this is the bonus that we will pay, $14,563, $14,563. Now, part 3, we have to show the actual payment of that bonus. So what do we debit and what do we credit? Obviously, you're paying it means that you're paying it with what?
Salary.
Cash. So cash is going to be credited or debited?
It's gonna be credited.
Credited. And what's going to be debited?
The bonus
Employee
Bonus what?
payable.
Bonus
Yeah.
payable. $14,563 and $14,563. Good. Ms. White, you keeping up with the break time?
Yes,
Is it time?
I was gonna say 10:30.
Okay, we'll do that. All right, next one, exercise 11-11. Prepare any necessary adjusting entries at December 31st, 2013 for Maxim Company's year-end financial statements for each of the following separate transactions and events. Employees earn vacation pay at a rate of 1 day per month. Just during December 20th, employees qualify for 1 vacation day each. Their average daily wage is $160 per employee. So we're supposed to prepare a journal entry. First of all, we're supposed to compute the vacation amount. And then we're supposed to prepare a journal entry to record that bonus that we're supposed to pay the employees. So if we have to compute the actual vacation pay, what do we do? What are we gonna do? How many employees are we dealing with?
20.
And how many days vacation do they get? One. And what's the rate per day? 160, right? So that's really how you're gonna calculate vacation. 20 employees times what? 1 day times what else?
160.
160, which gives us how much?
80.
80. For 160 per employee. 20 employees times 1, which just equals what?
320. I mean, 3,200.
Y'all better get them calculators together. All right, 3,200 is the vacation expense. What are we gonna do to record this in journal entry form?
Vacation.
Debit vacation benefits expense. Credit what?
Vacation benefits paid.
For 3,200. Good. Number 2 says during December, Maxim Company sold 12,000 units of product that carried a 60-day warranty. December sales for this product total 460,000. The company expects 10% of the units to need warranty repairs, and it estimates the average repair cost per unit will be $15. So how are we going to record this warranty? First, we gotta calculate, right? How are we gonna calculate this warranty? How many units are we dealing with?
12,000.
12,000 units, and then 10% of that is gonna be warranty, repairs, and what else?
And the average repair cost.
Average repair cost is $15. So 12,000 units times 10% times $15 per unit gives us how much? 18,000 warranty expense. Now, how do we record this in general journal form? Debit what? Credit what?
Warranty expense. Estimated warranty liability.
So debit warranty expense, credit estimated warranty liability for 18,000. Good. And we got enough time to do 11-14, and then I'll give you a break. Exercise 11-14 on page 467. Lenny Florida, an unmarried employee, works 48 hours in the week, ending January 12th. His pay rate is $14 per hour, and his wages are subject to no deductions other than FICA, Social Security, FICA, Medicare, and federal income tax. He claims 2 withholding allowances. Compute his regular pay, overtime pay, then compute his FICA tax deduction using 6.2% for Social Security portion and 1.45% for the Medicare portion. Income tax deduction, use the wage bracket withholding table of Exhibit 11, 8.6. Total deductions and net pay. Now this is important because this will be the first time that you will use the withholding tables for FIT. And so first I want to make sure that you can locate Exhibit 11-86 in your books. And that is on page 460, okay? So you just want to keep your finger on that page. The first thing we need to do is calculate what? His regular wages. What is this, 11-12? 14. So his regular pay is based on how many hours? 40 hours a week. And we're multiplying that by what hourly rate? $14, which gives us how much for his regular pay? $560. Now, he worked overtime as well, right? Mm-hmm. What is his overtime rate? What did they tell you in the problem?
It said 150%.
150% of
Regular rate.
his regular rate. So if his regular rate is $14, how many hours did he do for overtime? 8. So we're talking about 8 hours, and we need to do that $14 times that 150%, right? Which gives us how much for overtime? 168. Now what do we got to be concerned about? What's next? You have his regular pay, you have his overtime. It will make sense to do what with those?
And together with net pay?
Not net pay.
Gross pay.
Gross pay. 728, and that's his gross pay. Now, since we have his gross pay, we need to calculate what? Deductions and taxes, right? First tax up is the Social Security FICA, right? No?
Yes.
FICA comes first. So, in this case, the FICA Social Security rate is how much? 6.2% in this problem. So we're going to take what and multiply it by 6.2? 728, multiply that by 6.2% gives us what? Do they want us to round? No, they don't. So 45.14. What about Medicare?
728.9.
$728 times 1.45% equals $7. Is that what you're saying? What are you saying? $10.55. Okay.
Did you round?
Yes.
The last one.
Yeah, we're not supposed to learn. I have $10.50. Yeah, the do round. So 56. Yeah. Okay. What's the next deduction? FIT. Okay, so go back to that page I told you, which was 460, and look at exhibit 11A-6. Cause this, well, we hadn't got it. I'm happy for you, but you know, we gotta make sure everybody else get there. So this is probably the most simple way to calculate FIT, but when you take that payroll accounting class, it probably will not be this simple, okay? Remember how I told you the factors of calculating FIT are their withholdings, right? Their marital status, and what was the third one?
Where are you?
Exemption.
460.
460, yeah. We're on problem 11-14. You have to use page 460's table in order to get FIT.
Oh, okay, you talking about, oh, I'm seeing the table, like I could not see that table.
Okay,
like,
so
it didn't register, that's what you was.
this
you talking about
person,
a single person weekly. I was looking everywhere else, and I'm like, I don't see what's, okay, I'm back.
what did they say?
You gotta make at least.
This person is a single, unmarried employee, right? He has how many withholdings? 2. So 2 withholdings. And looking at those 2 first columns, at least but less than, his pay was at least how much?
720. It was at least 720, but not
More than
At least 720, but not more than
730.
730. So if we go under the 2 column, because we only had 2 exemptions, we get how much for FIT?
$76.
Are these all the deductions that he had?
Yeah.
Add all those up, how much are those deductions?
So y'all got the $76 just right on from
The 30.
Yes. How much are these deductions?
$131 for 1 week.
131. How much?
71 cents.
71 cents. Now, if we subtract his gross 728, subtract from that deductions of 131.71, his net pay is how much? 596
I'm off of a cent. I know.
dollars
Because
and
you added one, you
131.70,
said it's
not
70.
71.
Yeah, it's 70.
131.70.
what's his net pay?
Oh, 70.
596.30.
Good. Time for that break. I will see you back here at 10:50. Take 20 minutes. Come back. And I do mean come back, which will be March present for the day. 10:50. Okay, so let's move on to exercise. Because we stopped on 14, right? Let's do exercise 11-16. Exercise 11-16. Master Company has 10 employees. FICA Social Security taxes are 6.2% of the first 110,100 paid to each employee, and FICA Medicare taxes are 1.45% of gross pay. FUTA taxes are 0.8%, and SUTA taxes are 5.4% of the first 7,000 paid to each employee. Cumulative pay for the current year for each of its employees follows. Now, they have given us this table. They show us their cumulative pay, which is basically their year-to-date pay, okay? And we're supposed to, in letter A, compute in the table for each employee the columns for FICA, Social Security, Medicare, FUTA, and SUTA, okay? So the best thing for you to do is to set up
The table with FICA, with all the taxes and list the employees.
We're gonna do an employee column. We're gonna do cumulative pay. They had we're gonna do pay subject to FICA, Social Security, FICA, Med, FUTA, and SUTA. That's gonna be our columns. And first employee was
Hold up, please.
well, I'm just writing down the information that's already in the table.
Okay.
Steve, Tim, Brent, Christina, Kathleen, Michelle, Lori, Matt, Sanka, we ready now? Cumulative pay for Steve was how much? 6,000. Tim, 60,000. Brent, 87,000. Christina, Kathleen, Michelle, Lori, Matt, Sanka. How much? $4,000. Okay. Add that up for me and give me a total amount.
much is it? Nobody has it. Everybody should be. 6,000 plus 60,000 plus 87,000 plus 156,600 plus 106,900 110 100 plus 116,600 36,800 plus 4,000. Y'all look hot up here.
684,000.
684,000. You sure? Even?
I got 684,000.
Did y'all miss something? Or either you told me the wrong number. Something's missing.
I got 682,500.
I got everything. I got 684,000 even.
I did too.
You got who? 684.
I got it in. Okay.
Oh,
Hello.
I'm getting 682,500.
6,000 plus 60,000 plus 87,000. One 600 plus 106,900 Okay, so we will put
684, right?
yeah, I mean I can only go by what you tell me.
I missed putting the 600 in and it's like it's 683,100.
You missing a number.
I did
Oh,
twice.
you know
I got
what?
684.
I
I
see
did
it
twice
now.
about 684.
Hey, Kathleen, I'm missing something I need.
You got 684.
6,000.
I found out where I messed up at. I forgot that
Okay.
nine. Kathleen. So
Alright.
yeah, it's 684,000.
Alright. Alrighty.
That's right, I'm told.
Alright, so for Steve, how much of his 6,000 is taxable FICA Social Security?
172.
What?
6,000.
6,000.
Oh, I agree with you.
Okay, and what about Medicare? How much is taxable?
6,000.
FUTA? FUTA and SUTA? How much is taxable?
All
I
of
agree.
6,000. SUTA? Tim, how much of that 60,000 is taxable under FICA Social Security?
Okay.
Well, y'all gotta tell me. What's the amount?
6,000.
FICA Medicare.
6,000.
FUTA? 7,000. Say it with passion. SUTA.
7,000.
All right. Brent, how much of that 87,000? 87,000. FICA Med,
87,000.
FUTA,
7,000.
SUTA.
7,000.
Christina, how much of 156,600 is taxable under Social Security?
110,000.
I was for sure I was gonna be able to throw you off. FICA Medicare,
110,100.
I threw you off. Medicare?
Oh,
The whole thing, isn't it?
Oh.
Mm-hmm. Mm-hmm. Fuda and Suda.
7,000.
Kathleen,
106,900.
FICA Med,
106,900.
Fuda and Suda,
7,000.
Michelle.
Yes.
110,100.
Yes, Alex for 500.
Same for Medicaid.
Medicaid or Medicare?
Medicare, I'm sorry.
Lord have mercy.
I just seen the name.
Lori K. How much is eligible under FICA Social Security?
110,100.
Mm. What about Medicare?
160,000.
She didn't get thrown off that time. Fuda and Suda,
7,000.
Matt.
36,000.
Uh-uh. Not right here. In the second part, yes. Fuda and Suda.
7,000.
You went and calculated all of it?
Yes.
Lord. Sanka,
4,000.
4,000. FICA Medicare.
4,000.
Fuda and Suda.
4,000.
Add all columns up. And I'm not going to ask because we'll be here all day. But these numbers obviously are important for the sake of Part B. And it says here for Part B, for the company, compute each total for FICA Social Security taxes, Medicare taxes, FUTA, and SUTA. Hint, very important to read the hint. Remember to include in those totals any employee share of taxes that the company must collect, round amounts to cents. Let me know when you're ready for Part B. Well, really, you should be, right? All you were doing were adding these columns. Yeah. Just make sure you write the totals down because you're going to need them to calculate the taxes.
Should we find out next how much of the employee taxes or what they just asked us in the end?
That's what we're about. Okay, so the first thing we need to calculate are the Social Security taxes, right? No.
Mm-hmm.
Yeah. So, in this case, what was the total subject to FICA Social Security from the previous part?
6,000.
For all of them together?
What was the question?
What was the amount subject to Social Security FICA
Total
total?
$630,900.
What?
630.
Do I need to go back to, I wrote it on the previous slide. 631,000. 631,000. And then we're gonna multiply that by what?
6.2.
631,000 times 6.2%. Going back to that previous part, this column here, 631,000. We got the 31,800, 900, 1,000, 1,900, 2,000. Yeah, carry over. Make sure y'all write all these down. This is needed.
My total came
Let's write all of these down real quick so we can go back to the second part. So 631,000 times 6.2%. And also, what else do we need to do?
calculate the employee.
Employee and who else? Employer. So just simply do times 2.
40,384.
Times 2.
No, I thought they were doing
631 times 6.2 times 2.
78,244.
Yes.
78,000.
Oh, okay.
How much?
244.
244. What about FICA Medicare? How much is taxable? 684,000 multiplied by what rate?
1.45.
Also multiplied by what?
2.
2 equals how much?
$19,836.
Everybody else got the same thing? 19,000.
836.
Okay. And FUTA. What's the FUTA rate? How much was taxable?
0.8%.
59,000, and the FUTA rate is 0.8
Yes.
or 0.08.
0.08.
0.08%, which gives us
No, it's 0.8. I'm sorry. 0.8.
0.8.
0.08. It's 0.80.
Okay. So times 0.8% equals how much FUTA taxable? Now this one we don't do times 2 because only the employer pays FUTA and SUTA. So how much is it?
$472.
$472. And what about SUTA? Is the rate the same?
No.
We know that the amount is the same. The taxable amount is the same. What was it? 5 point what?
4%. 5.4. Okay.
So that gives us, say it louder, 318?
Yeah.
That don't seem right. 5.4% of 59,000 is much more than $318.
$3,182.
It might just be your decimal setting. Those calculators can be tricky. Good. It is now 11:13, and while I hate to do this to both you and thyself. I would like to do problem 11-1A. Slam your stuff down. I need one more problem.
I didn't slam it down. Oh my God.
So hostile. One more and then we'll be gone. 11. Problem 11-1A. She said, again. This is my bull. And you know, I believe, and I could be wrong, I'm thinking this one is on your homework, but I can't be for sure. But it still needs to be done. So, problem 11-1A, page 469. Tyrell Company entered into the following transactions involving short-term liabilities in 2012 and 2013. Now, what they want us to do, if you go down to the required section, the first thing is to, bless you, the first thing is to determine the maturity date for each of these three notes described. So, you got those calendars, right? We don't need no mess. Sometimes we don't know when it's 30 days in a month, 31 days in a month. And we keep going over and over and over again. However,
Did you hand out a calendar?
I'm sorry, Sweet Pea. Yes, I did. And I don't know why I forgot that you told me you would be out there last week. So what I'll do is I'll email it to you.
Thank you.
And Angel. Okay, so if they're wanting us to find the maturity date, first of all, there are how many banks that we're dealing with? Not banks, but how many companies are we dealing with? One. Three. And what's the name of them? National. Locust. And Fargo. Wells Fargo. Yeah. And the first thing we're doing is finding the maturity date. So the date of the note, I need the terms, and then we're going to find the maturity date. What's the date of the note for National Bank? The date that it was issued, July 8th. So, yeah, Locust was first, not National. So what was the date of Locust, the date issued?
April 20th.
For Locust?
Yeah.
The date that it was issued was not April 20th.
May 19th.
May 19th. They just said that it replaced the April 20th accounts payable. But the date there is May 19th. What was the term of that? How many days?
90.
90 days. So that means the maturity date would be when? What's the maturity date? It's on page
August 16th.
69. From May 19th
August 16th.
to June 19th is how many days?
13,
And from June 19th
30,
to July 19th, 30 days. 60 at that point. From July 19th to August.
August the 16th is 9 days.
No, it's not. Count again. I gave you calendars this time.
That's what I just did, I counted, we added the 30 plus the 31, that was 61, plus the first 13 days, that was 74.
Right.
If this start, ho. From May 19th to June 19th, that's how many days approximately?
But why we put May 19th when it should have been April 20th, right? The date of the.
No. August 16th?
That's what I got.
Yo,
That's what I got.
I gave you calendars so we wouldn't
That's
keep
what I
going.
was doing, on the calendar.
I'm going back, I'm
Hold,
on
let
the
me
first.
answer your question first. It's not April 20th. You're looking at the date of the transaction. They said replaced the April 20th accounts payable. That doesn't mean that it was issued on April 20th. It was issued on May 19th. Now, to count days, and it looks like we're gonna have to go day by day.
It's
What did you get, Mr. Coleman? July, it's 90 days, so August 17th. Why didn't y'all get August 17th?
Cause I didn't count the 19th.
Okay, so.
You don't
I
need to
started
count.
on the 20th. I counted the 20th first day.
Why don't you start on the 20th? If we just said the first day was May 19th. You count the day of this.
So we count 30 days from
The day it was issued, from May 19th to June 19th was how many days?
31.
What? Come on now, y'all smarter than me. From May 19th to June 19th is approximately how many days?
30.
From June 19th to July 19th is approximately how many
30
days?
days.
And from July 19th up until August 19th is how many days?
30.
32. Notice I said to August 19th. 32 days, right? So if you count 2 days before August 19th, what do you get? Don't have me print out them calendars and you're not using them. August 17th is the day. Okay, let's try it again. National Bank, what was the day it was issued?
July 8th.
July 8th. And how many days in turn?
120 days.
Okay, so let's try one more. What is the maturity date for national? Count the day it was issued.
November 6th.
Count again.
November the 4th.
November 4th.
Count again.
I don't know what I'm going wrong with.
Because you're thinking too hard. July 8th to August 8th is approximately how many days?
30.
August 8th to September 8th is approximately how many days?
30.
September 8th to October 8th is approximately how many days?
30.
31. Okay.
October 8th to November 8th is how many days?
30.
Oh no, it's not 30
November
days.
9th.
November 5th.
Thank you. November 5th. I'm really trying to figure out where y'all going wrong.
I don't understand.
Because you can sit and count the actual days if you have to, or whether you do it the way that I'm doing it, you're still coming up short.
November the 4th.
In other words, count in 30-day increments. You know, from July 8th to August 8th, that's approximately 30 days. You don't need to count that. You know, from August 8th to September 8th, there's approximately 30 days. You know, from September 8th to October 8th, that it's approximately 30 days, right? So far we're up to how many days at that point? 90. And then to count 30 days from there would equal 120, right? But if we went from October 8th to November 8th and did, that would be more than 30 days, would it not?
Excuse me.
Hold on, I just counted every single day from July the 8th to November the 4th, and that was 120 days.
Right. So that means that it would be due on what day?
November 4th.
November 5th. I'm just really trying. I don't get that. Y'all need to practice that. That's going to be the demise of you losing points on one question because of a day, a matter of a day. It's November 5th. Last one, final one, thankfully. Fargo, what was the date issued?
November 28th.
How many days in the term?
60.
What's the maturity date? I'm afraid to ask. What's the maturity date? Houston, we got it. Now, what did you do?
I counted.
Well, yeah, I know that. I know that. But what else did you do?
And counted from the 28th, 60 days.
Approximately 60 days, right? Okay, one day y'all will get it. Just, keep working on it. Number 2, the requirement is for us to determine the interest due at maturity for each of the 3 notes. So assume a 360-day year. When we're calculating interest, what do? We take the principal and we multiply by what?
The interest rate.
Interest rate, and then what? Don't you multiply the amount of days over 360, fraction of a year?
Right.
Right?
Yeah.
So, principal interest rate, fraction of year equals actual interest expense. So what was the principal amount of that locust loan? What was the amount of the loan for locust? 35,000. And what was the interest rate?
10%.
10%. And what was the fraction of year or the terms? 90 over what? 360, which means our interest is how much? $875. What was the principal for national? What was the amount of the loan?
80,000.
80,000 interest rate?
9%.
9%. How many days are we dealing with? 120 over 360. What's our interest amount?
Okay.
2,400. What about Fargo? What was the principal amount of that loan? 42,000. What was the interest rate? 8%. How many days are we dealing with? 60 over 360. What's our interest? $560. Good.
So you're multiplying 35,000 times 10% times.
90 divided by 360.
Okay.
And that's gonna give us our interest expense for that particular loan. The third thing for us to do is determine the interest expense to be recorded in the adjusting entry at the end of 2012. Determine the interest expense to be recorded in the adjusting entry at the end of 2012. In other words, which one of those loans did not fully mature by the end of 2012? Fargo. So that's the one we need to be determining for the end of 2012. And the total interest of that note was how much?
560.
560. And how many days were still
30.
remaining? Or better yet, how many days had passed by the end of 2012? 33. So 560 times 33 over how many days?
360.
Not 360. What was the term of the note?
60.
60 days. 60 days equals what? $308. This was 2012 interest for Fargo because it hadn't fully matured. And then number 4 says determine the interest expense to be recorded in 2013. The only one that still hadn't matured, had matured in 2013 was still Fargo. So this time we're gonna do the interest of 560. How many days had passed? 27. 27 days over how many? 60 days gives us how much? $252. That was the interest to be recorded in 2013 for Fargo, or the adjustment rather.
I had a question.
Uh-huh.
Could we have just subtracted the interest from 2012 to give us the remaining interest for 2013? Okay.
Either way would have been sufficient. Now, part 5 says prepare journal entries for all the preceding transactions and events for years 2012 and 2013. So basically they're saying all these journal entries we need to record. Fine. Okay, so very first journal entry, April 20th, purchased $40,250 of merchandise on credit from both. His terms are 110, net 30. Tyrell uses the perpetual inventory system. That is totally irrelevant to the transaction. So are those terms at this point. So anytime, we're recording the merchandise that we purchased, we debit what, credit what?
Debit, guys, credit.
So 420, we debit merchandise inventory. Credit what? They ain't say nothing about cash in there. Accounts payable who? Who? Locust, and what's the amount?
40,000.
40,250. Somebody read the next transaction. Don't all jump at once.
Replace the April 20th account payable to Locust with a 90-day, 35,000 note bearing with 10% annual interest along with 5,250 in cash.
So what's happening here?
Debit cash.
I'm gonna say debit cash.
No, I mean what is happening? What are they doing?
They're replacing their
Extending
own,
their contract.
yeah.
Extending an accounts payable to a what?
Notes
Notes
payable.
payable.
Notes payable. So the key is to take it out of accounts payable and create the notes payable, right? So that means in order for you to do that, you're gonna have to debit what?
Accounts payable.
Accounts payable who?
Locust.
Locust. And credit.
Notes payable Locust.
Uh-huh. And what else? Cash.
Yeah.
How much for accounts payable? You don't know yet? How much for cash?
25.
5,200.
Yeah.
What?
5,250.
5,250. What about notes payable?
35,000.
35,000. So that means accounts payable is how much?
40,200.
40,250. Somebody read the next one.
Borrowed $80,000 cash from National Bank by signing a 120-day 9% interest bearing note with a face value of $80,000.
Which is irrelevant right now. What do I debit? What do I credit? You got a loan, which means you received what?
Accounts payable.
You didn't receive an accounts payable.
Accounts payable.
You received a loan, which means you received what?
Notes payable.
No, you did not. You received cash.
Oh.
You created
A
a
note payable.
notes payable national. How much?
80,000.
Read the next one.
Pay the amount due on the note to Locust at the maturity date.
So if we're paying a note at maturity, that Locust loan, what were the terms? What's the interest rate? You already calculated this stuff. 10%. We don't need to calculate that because we had it already. What was the interest that we recorded in the previous part for Locust? 875 was the interest expense. So you're going to debit interest expense for that $875. What else are you going to do? Debit what else? Are you not paying this loan off at maturity? So what else do you debit? It ain't accounts payable. Notes payable. Locust. How much? What was the principal of that Locust loan? 35,000. And you clearly paid it off with what? Cash. For a total of how much?
35,855.
Read the next one.
It's the same for National Bank.
Read it.
Pay the amount due on the note to National Bank with the maturity date.
So same journal entry as we have here. Debit interest expense. Debit also notes payable who? Who's the loan for? National. And credit cash. What's the amount for interest expense from the previous part?
2,400.
2,400. What was the principal amount of the loan?
80,000.
80,000. So a total cash you paid out?
82,400.
82,400. Next one, read that one.
The next one is reporting adjusted entries that occur interest on the note for Fargo.
So you remember how we said, no.
Oh, no, I read the one below there, I'm sorry.
November 28th.
Borrow 42,000 cash from Fargo Bank by signing a 60-day, 8% interest bearing note with a face value of 42,000.
All that's irrelevant. What do I debit? What do I credit? You borrowed money, which means you received cash and created a notes payable for
42,000.
who's the company?
Fargo.
Read the next one.
Recorded and adjusting entry for accrued interest on the note to Fargo Bank.
You remember how Fargo hadn't totally matured at the end of 2012?
Yep.
Remember how we calculated that interest? How much was that interest?
$308.
$308. So we're gonna debit what? Credit what?
Accrued interest.
Interest expense. And credit what? Interest payable. Say it with confidence. Read the last one. No, it ain't. You got transactions. This paid the amount due on the note. So they're talking about Fargo on January 27th because that's what we said the maturity date was. What do we debit? What do we credit? Didn't you bring interest expense from the? This is going to be an interest expense, right?
Right.
So don't you need to debit that?
380, 308.
That was your interest expense for 2012.
252.
252. You also need to debit what else?
Interest payable, that's what we're gonna bring in.
Yes.
Okay.
Interest payable for 308. And then debit what else?
Notes payable.
Notes payable. Fargo. How much?
42,000.
42,000. And credit what?
Cash.
For
42,000.
42,560. Take a deep breath. Because I know that I will. This is what I need you to do for next week. I need you to, one, read chapter 12 in its entirety. Okay? Next week, I need you to read chapter 12. And, well, before you come back, I should say that. When you come back to me next week, you should have read chapter 12 in its entirety. I'm going to tell you the problems that we are going to go over so that you can start working on them. And I'm on page 500 in your book. Exercise 12-3. Exercise 12-4. Exercise 12-5. Exercise 12-6. Exercise 12-7. Exercise 12-10. And problem 12-3A. So I'll go over them again.
Read chapter 12 in its entirety. Do exercise 12-1, 12-2, 12-3, 12-4, 12-5, 12-6, and I almost forgot, what was that last one?
12-7, 12-10, problem 12-3A.
12-7, 12-10, and problem 12-3A. And trust me, if you don't get through all of them, that's fine. Those are the ones we're gonna go over in class next week. So that's why I'm telling you that. So you be prepared for them.
You added on 1 and 2.
1 and 2. Oh, I'm sorry, no, one and 2 is not a part of it, but I did say 12-3, right?
Yes.
So 12-3, 12-4, 12-5, 12-6, 12-7, 12-10, and problem 12-3A.